Hi and welcome back to Cheeky Crypto. Today, guys, we're going to be jumping down into the world of Bitcoin, taking a look at the weekly close position, what kind of number that we're looking for on the weekly chart. We'll be taking a look at some smart money concepts on the weekly chart, as well as taking a look at the daily positions for Bitcoin. As we get into this video, if you find it useful and informative, smash that like button. I do appreciate that. If you're new to the channel, subscribe, tap the bell, select all the notifications, and in doing so, you will be kept up to date with absolutely everything that we do here at Cheeky Crypto. And if you haven't yet joined us in Discord, guys, check it out. Link to the description down below. It's well worth it. I don't think you'll be disappointed by what you find down there. Let's make a start with this one though. So Bitcoin paired up with USDT here on the weekly chart, and Binance is our data source. As you can kind of see, we have seen the death cross occur on the 50 moving average and the 200 moving average. That happened on the 6th of February, a week commencing the 6th of February. We can see it there. Price has moved up to retest the 200 moving average. If I actually go ahead and just remove those two and throw on the EMAs, you can also see here that we have a couple of interesting levels, right? With 200 EMA, this is an area that we were finding as our resistance and the area that we got rejected from back in August of 2022. You can see that we got rejected from it over here in January of 2023. Right now, this particular week, we have surged up above the 200 EMA, which if we were to close above, we could see this maybe as a bit of a bullish turn on BTC, closing above the 200 EMA. Well, we haven't really seen this for on this chart, we haven't seen it before at all. So it's going to be an interesting one to kind of see how the markets react to this. This would normally be seen as a pretty bullish movement in the case of BTC. Now, the other thing we have to bear in mind is that we are below the 50 EMA and that this is the area of resistance at the moment. So it does look like we are kind of finding ourselves with a little bit of resistance up on the 50 EMA. And of course, you know, with the death cross looming, the expectation is that we do pull down. I say looming, it's actually already occurred. So with a death cross on our moving averages, as you can kind of see here, the blue and the yellow lines, the red and the white lines are our EMAs, and you can see how they are reacting as well. We can also acknowledge that the 50 EMA has crossed negatively below the longer term 200 MA. So again, we would look at that also as a death cross. These two death crosses essentially happened within a couple of weeks of each other. Let's go ahead and turn off those EMAs for a second. In fact, I'll also turn off the MAs. So essentially what we have here then is actually some interesting kind of resistance up in this zone. It's no coincidence that we have the double top either. This happening just up here. If I grab a horizontal line, just throw it on there at 25,211. We've actually seen a high of 25,250. Okay, so we did actually push up slightly higher here on the price chart when it comes to a double top, but it is pretty much, and we can kind of see and acknowledge that this is the area of resistance, and we should acknowledge it as such. Okay, we don't want to get too carried away thinking that something is slightly more bullish than it maybe actually is. Now, as I zoom in on this, we should focus in on this little kind of light, I'll say it's dark actually, dark yellow box area, right? This area that I've highlighted here, this is the area of supply. Okay, and what we mean by this is it's an area where people generally typically are looking to sell. Okay, we can see this and it is identifiable through these wicks, right? We come up, we find that there's a huge tail wicks here, okay, on the higher side. This essentially shows us that there's a lot of selling pressure pushing the price down, right? Here, 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 and here. So we can see that we had 1, 2, 3 wicks come into this yellow box area. Okay, we can see that we closed below this area as well. Okay, so this symbolizes to us that there's a huge amount of selling pressure occurring in this range. Okay, we can see that this is exactly where we are right now, and we also have one of those tail of a wicks just up here as well. Okay, so we can see that we are looking at trying to come out of this range. Now, from a closed position, what would we be looking for on the weekly chart? Well, we'd be looking for a closed position above this wick on an ideal world. That would be $25,211. So if the price can push up and close this weekly candle above this area, then we would look at that as chewing through all of those sell orders, and now we're looking pretty bullish, right? Not only are we closing above the 200 EMA, but we're also potentially even closing above the 50 EMA, and we've got chewed through all of those supply or seller orders, and we are now looking pretty bullish. So at that point in there in time, we'll be looking at a pretty bullish movement to the upside. But a close above $25,211 is a bit of a tall ask. It's not impossible, and we see a lot of volatility on Sunday evenings all around the closed positions. The other thing to bear in mind is that if the sell orders and these sellers really are going to be bearish on Bitcoin, then you'll be looking for a closed position below this open position, really, which would be just over here at $24,305. Okay, so if we were to see the bears take control, we'll be looking at bringing this price down below $24,305 right down here. Okay, so then that keeps consistency in this block as the supply range. Okay, so we'll be looking to see where this candle closes at the end of play today. We are either going to surge up higher, okay, and looking for confirmation of a bullish movement. If we stay where we are right now and it's just flat at around 24.5K, then it's inconclusive. And if the price does close down lower than the 24,305 area, then it does mean that this remains our area of resistance, and we should be thinking, price action is going to respect that. Now we can come up higher, but chances are, this is going to kind of withhold, or is going to hold up as our supply area where the sellers are, and they're going to keep the price down. The bears will keep the price down. Okay, so from our weekly chart, these are the key levels that we're currently in and we're fighting right now, and these are key areas that we want to be aware of. Now, if I come over into smart money concepts, we can actually take a look at a few things that are interesting on our weekly chart. Here we can see that we have a change of characteristic here. Okay, so we were coming down, we've changed the character upwards. Okay, now normally when you have a change of character like this, some people jump the gun too soon, right? They essentially see the change of character and they think, fantastic, we're going to the moon, we'll come in. And usually what happens though is that there are some imbalances that create these change of characters. And we can see that there's such an imbalance here. The imbalance basically symbolizes how we have an imbalance in the order books, the buyers and the sellers. So there's a lot of buying pressure, but there was no one selling in this area. So the price just jumped all the way up to where the next load of sellers are, right? So price comes all the way up here and it leaves this fair value gap behind. Okay, this imbalance in the order books usually gets respected and price has to comes down naturally, gravitates towards it. And the reason for this is all to do with liquidity. In this area here, there was no liquidity. Okay, so an institutional player comes in, takes the price out of does a buy order down here, and the price jumps to this next high area because there's no liquidity here. There's no one selling their Bitcoin to them. The sellers are up here and the sellers were down here, and there was no selling occurring here. So essentially price comes up, respects this area. So there's no liquidity for the large institutional player to buy. They slow off their buying, they ease off their buying, and they wait for liquidity to start forming again. Okay, so usually on these higher ranges up here, you find that there's a lot of testing going on and a lot of manipulation within the price action on the higher outside after you find these fair value gaps. What tends to happen though is price loves to come back down, fill the fair value gap, and then it will go back in the direction. So it'll go back up after filling this area. So where is this gap and how likely is it that we are going to be moving down? Well, I think it's highly likely that we move down, bearing in mind this is the weekly chart. And, we are heavily overbought, for example. We can see we're heavily overbought, not only on the weekly, but the daily as well, the 4-hourly and so forth. So a move to the downside is likely. This fair value gap, at the moment, if I draw in some horizontal lines, we have this fair value gap marked up between 17,176 and 20,407. So the chances are we're going to have to come back down and retest these lows. Now, 17,176 is going to be a strong support level. We can see that also in here. Okay, this is an area that was previously resistance, and we can see it again with the wicks. And there was lots of selling occurring here, yet the institutional player basically pulled us right the way through this. So coming back down to retest and find liquidity is highly likely. So the expectation is we're going to have to come down towards that $17,000 at some point in the future. And it's better to do this now than later, in my humble opinion. Now, if we zoom out of this, we can respect the fact that on this weekly chart, there are no other fair value gaps that haven't been filled here across this weekly chart. Now we can go to the daily and we can see plenty on the daily chart that haven't been filled, right? We can see these, okay, in the history of Bitcoin. Now, do we think we're going to come down and fill the 5,400? I mean, you could, but I don't think that's likely, at least not at this point. 7,800, that could get filled later on over here, for example. A 12,000 could get filled, and so could the 14,000, right? So we know that there's some fair value gaps, not only on the weekly chart around the 17K, but also historically in the past, there are some fair value gaps that were never filled. So chances are that there's going to be some liquidity in those areas at some point in the future, possibly, specifically around the $12,000 to $14,000 levels. The 5,000 and 7,000, you know, those are all fair play, but fair game. I just don't think it's going to happen myself, but we'll see how that kind of goes. But here you can see on the daily chart, we also have these gaps that were left behind. This one almost got filled, but didn't quite get filled. So we came down, respected it, and then moved back up again, but we haven't quite finished that off. So when it comes to our weekly chart, yeah, we've got this gap left behind, and I do think there's a chance that we kind of come back down into it. Now, the biggest worry that I had, and I still believe this, I respectively still believe this, is that equilibrium is right up here. Equilibrium is around that kind of 30K level. A little bit short would be 33, and on the higher side, 37. Equilibrium is an area of 50% between the premium and the discounted ranges. The issue that I have with this is it could be a giant big reset where we do something like this and we come down and we respect that $7,000 value area, because all you're doing is this big corrective structure that spans multiple years. I said it before, so we want to be aware that Elliott wave theory, smart money concepts are two things combined together. It makes us really concerned over where, I mean, look at the, where the actual values are being represented on the chart, and a big corrective structure upwards just to come back down could be pretty bearish overall. So although it looks like we're in a bull market, I don't think we actually are. If anything, it's a bear market rally. We haven't got a 5-wave trend structure. We've got a WXYXZ structure, and a move to the downside is highly likely. So just kind of keep these things in mind from our weekly standpoint. We're heavily overbought. Now, if we come down into our daily, well, we are in the higher highs and higher lows scenario, which if we zoom out, this is a pretty big one. The bigger, in fact, than what we had seen up here since the lows of January 2022 to the highs of March 2022, which, if you remember rightly from the channel, if you're around back then, we were saying you'd buy here and we'd come out of our positions here, 47.5K. We actually went a slightly higher at 48, but 47.5 is what we were talking about on the channel. You can check that out. You can search the history of the channel if you want. And what we've actually got going on right now is a very similar setup. Higher highs, higher lows have a tendency to a breakdown. You can see these time and time again. And of course, really what we're looking for are the lower lows and the lower highs, which have a tendency to break upwards, right? And we're not seeing those at the moment. We just see a brief one down lower, but we're not really seeing the bullish movements to the upside just yet. We're looking for these big corrective structures, which, we can argue that we're in a big one over here. But I think actually we've got to come down before we move up and all that kind of stuff. So from our daily chart, we are testing the upper area of this. Okay, so we would draw these trend lines in. You can see that we've tested this upper area of our parallel channel. And well, when you're in the higher range, you're in the resistances. You're in the resistances in the double top scenario. We also overbought on the daily and overbought on the weekly. Chances are the most probable scenario is that we end up moving down, and where we end up moving down to is the fair value gap that was left behind within the charts on our smart money concept. So for the most part, it does look like we're getting very, very close to reversal. I wouldn't say we're necessarily there just yet, but I do expect a big drop in the price action of Bitcoin, of XRP, pretty much most altcoins as well. VeChain, Harmony One, Cardano, most of them are looking for a move to the downside alongside BTC. So I'm going to leave the video right there. If you found it useful and informative, smash that like button. I do appreciate that. If you're new to the channel, subscribe, and don't forget to join us down in Discord. Guys, until the next one, have a fantastic day.